right, ladies and gentlemen, today is another good day the Lord have made. So let me begin by giving thanks and glory to God. Without Him, there is nothing we can achieve, right? So He preserve our lives to be here today, not that we deserve it. We don't deserve anything. So we must have to give Him all the glory, right? Okay, guys, remember where we stopped last week. Uh, we did something of weighted gross profit, right? We did I showed you how to calculate gross profit, how to calculate gross profit percentage, right? Like I said, it's not difficult. So when you got your sales, you got your cost of sales, so you just minus it, right? Whatever it costs you to acquire your product. I hope you understand what I'm saying. Eh? So, like the typical example I gave to you, the hypothetical example, if you will, of that of bread, right? You must know the selling price, you must know the cost price of cost. Then you must know the numbers that were sold, right? If it is more than one unit, then you multiply it, you get your revenue or your sales, if you will. Like I explained to you, you can call it sales, right? You can call it income, right? You can as well call it turnover, right? So whatever you generated, you need to minus less what it costs you to acquire the product. So the leftover is what we call gross what? Gross profit. Understand it? So now you need to digress a little bit and remove your fixed expenses. Like I said, when you are doing a business, we got two type of costs that we need to preoccupy ourselves with as far as this contest is concerned. One is the variable cost, then the other one is the fixed expenses, right? The variable cost is possibly what it costs you or what you expended, if you will, to buy a product if you are doing a retail business. Remember, we got different types of businesses. You got a retail business. What does it entail? You buy and there you sell. That is a retail business. For example, you can talk about shop. Let me start little. Tax shop, tax shop. Tax shop. Your parents they got tax shop at home. What do? They go to micro or wherever they deem fit to source out their product at a reasonable price. When they buy in bulk, then they pay a discounted amount, right? Then they bring those items to the tuck shop and they break the back by selling in units. Do you understand? They put their markup, right? So that they can be able to recoup their expenses as well as make little thing, something out of it, right? Which we regard as profit to put food on the table, right? For you and to pay your school fees and other expenses. Do you understand what I mean? So in running that business, as I said, we got principally two type of costs, which is the variable cost as well as the fixed expenses. The variable cost is the amount that himself or herself paid to acquire those items. Right. So when those items are sold, he must remove that amount. Whatever is left over, we call it the gross profit. Then there are certain expenses which are fixed expenses. Fixed in the sense that it remains the same. Every month he incurred those costs. It's not something that goes along with the sales volume, right? So you need to remove that to have the net profit, right? Then I went as far as teaching you how to calculate a gross profit percentage. What did I say? I gave you the formula, right? If you want to calculate the gross profit percentage, in other words, you are expressing the gross profit as a percentage of the sales. I told you. For example, if they ask you to explain in the exam, perhaps wherever, you can be able to explain what is a gross profit. The gross profit percentage, they say. Gross profit percentage, right? It's a way of expressing gross profit as a percentage of sales, which means gross profit divided by sales times 100. That is easy. Gross profit divided by sales times 100. Do you understand what I mean? That is how to calculate it. Then I showed you how to calculate. Okay, we did that gross profit percentage. I told you that you can use that if you are dealing with one product. Right. If you are dealing with one product. In most cases, most of the business doesn't sell only one product. Understand? Right? For example, your old man at home that got a tuck shop is not only selling bread, right? Perhaps selling sugar, selling whatever, right? Many things together. Now, for your old man to calculate his gross profit, right? He needs to use a different methods. You cannot use the first method I gave because it's that one is only for one product. For example, your old man is selling different items. Some are having higher sales than others. Do you understand? In terms of the contribution, you have different contribution, right? One is having a different percentage of gross profit. The other one is having a different percentage of gross profit. Now he wants to know the average, the weighted average gross profit of his business. You understand? Then you need to use this formula. You need to use this methodology. Let me call it methodology, if you like. Right? I repeat myself. The first one is for one product. When you have more than one product, then you're gonna be obliged to use this method. We call it the weighted average gross profit percentage. You see, the language, how many things combine? Weighted, it's weighted, right? Why we are using that language weighted here? You see, this one have 65% of the sales, this one have 35%. Then when you add everything together, makes a unified, right? A unified gross profit percentage. That means it's weighted. Remember, you're gonna add the two together, right? To give you the average. See what we are doing. Okay. Guys, that is where you need to use this. This thing is very important. If you know how to do something like this and it comes out in the exam or wherever somebody asks you, you're going to chow it, right? You understand what I mean? For most of you that would like to do a higher degrees in business administration or whatever you want to study, you're going to still come across this. It's the same. That time when they show you this, you see, then you're gonna quickly remember me. Say, hey, that Dr. D taught us this formula. I know it. You will be the one that will be teaching others, right? Okay. So what we are saying here is this: we got two type of product being sold here. It can be 10, it can be 20. If no matter how many it is, if you know the percentage of sales of the contribution, right? The percentage of sales of such product in your business, you can calculate it. So what I was trying to say here now, this general man, or rather this old man, is selling two items, milk and bread. Is that how you pronounce it? Milk, right? And bread, right? So these are the products, right? Then the percentage of sales, what it means is this. In this business, right, the percentage of sales supposed to be 100%, right? Irrespective of how many products you are selling. You can be selling 1,000 products. At the end of the day, the percentage of sales must be 100%, right? Apportioned among the different products. You understand what I'm trying to say? Do you get what I'm saying now? Do you get it? Right. You got two products here. Right. Which are milk. Right. 65%. I want to test you now if you do understand what I'm saying. I said, no matter how many the products are, at the end of the day, the percentage of sales when you add up must be 100. Do you understand? Right. Okay. You see now, 65 plus 35 is 100. That means in the sales, milk represents 65%. Right? Whilst bread is 35%. 35 plus 65, 100. In the exam, they can trick you. They want to test you, whether you know what you are doing. They can give you, say, milk, 65, then bread, they say, they put a question mark, right? They ask you to calculate it. You can calculate it because you know it's supposed to be, when you add the two, it's supposed to be 100. Then you just say 100 minus 65, it will give you 35. Sometimes in the exam, they won't give you this. Does it make sense to you? Right. Okay. Let me see if you do understand what I mean. If milk is 40%, what gonna be the bread? 60. Good. Yeah, I'm happy. You know what I'm talking about. Okay. This is in terms of the sales. Right. Now, the gross profit. The gross profit for each product for milk per se specifically is 29%. In the exam, you're going to be given, right? This information you're going to be given. Then that of bread is 33%. Now, here going to be blank for you. You need to calculate it, right? So, we need to calculate whatever that is in column 3, which is the weighted gross profit percentage. It's easy. You just said one, this is one, column one times column two, you've got this. But have you ever tried it with your calculator? Because you need to try it. Sometimes you do know how to work it, but your calculator can put you in a state of jeopardy if you don't know how to press your calculator. You can look at it, oh, this is how it's been done. But when you want to do it on your own, you press your calculator, you press the wrong stuff, then you get the wrong answer. I remember, I'm telling you from my experience. I remember when I was doing this in adversity. The first time I pressed this, I said, why am I not getting this thing right? Have you tried it? Right. What are you here now? Okay. Have you? No, don't disturb me. Come later. I said, brief. Well, right? So you multiply, have a, try it in your calculator. You need to practicalize it, right? Quickly, quickly, quickly. Time is going. Time is going. Because I want to delve into the budgeting now. Budgeting. Let me see how many of you gonna get it right. Did you get it right? Okay, quickly, 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 quickly. I say brief. Move fast, move fast. All right. 69% times 29%. Did you get it? I said, there was a time, there was a textbook we were using. The calculation was wrong on the textbook. Did you get it? Huh? You didn't get it. Who got it right? Nobody. You got it. Show them how you did it. Tell them. This is why I need to have a second mic. Right. Very soon. On Wednesday, there will be a second mic there. The way I did, okay, if you say 0.65 times 0.29, what are you going to get? Say 0.65 times 0.29. 0.65 times 0.29. Did you apply that my formula? 0.65 times 0.29. You must try it on your own, otherwise you're gonna struggle during the exam. Did you get it? I said 0.65. 0.65 times 0.29. What are you getting? Huh? 0, come on. Say it boldly. 0, come on. 1885. Then you approximate 19. Which is that 19? You see? You know how I'm doing it. If I'm to do it my own, right? Remember, guys, listen, remember. 65% is 65 over 100, right? Then 65 over 100 is the same thing as 0.65. Osanze, hello, it's a magic now. The teacher is talking magic. 65% is the same thing as 0.65. So 65 divided by 100. I think this modern calculator that they are doing these days is confusing you guys. This calculator. 65% is the same thing as 0.65. Right. Then 29% is the same thing as 0.29. Right? Then I will just say 0.65, which is 0. If I say, if I say 0.65, is the same thing as 0.65, which is the same thing as 65%. Right? Then when you multiply it, it gives you 0.1888. Right? Then times 100, you're gonna give you 1 8 18,888. Okay, say times 100. 18,888, right? Then convert it, write it in two decimal places, right? Then it's gonna be 19%. That is another short way to do it. But you must play with your calculator, right? Then when you multiply the two column A multiplied by column 2, you get this, then you add this one, right? This plus this, then you get this. 19 plus 12, 31 is very easy, right? So you got 12% for bread and then 19% for milk. It's very easy, right? Try it at home. And you got some examples in your book, right? Very easy. And if you are able to know this, I'm telling you, because this is the most challenging thing, right? The most challenging aspect of what we are doing here. This one and break even. I'm gonna teach you another calculation. We call it break even. These are what is holding this subject. If you know this and you know break even, you are done. And cash flow, know what is cash flow, right? You know, when you are doing business management, right? Entrepreneurship and business management, they are doing that degree level. These are the things that are holding in the key. Once you know this one, you are gone. You are sorted, right? So it's good at this your level. We're introducing you to this stuff. I did these things at undergraduate level, right? Adversity, this stuff. Okay, now budgeting. Guys, you know, like I said, this is one of the most important ingredients that can make that's, let me put it this way, one of the most important components, right, of this subject you are doing, budgeting. This area we are talking about now. You know, if you know how to prepare a budget, you can easily get a job. Even in the public service, right? Parliament, government offices, they look for people that can be able to prepare a budget. So open your ears. This one is one of the most important areas as well that you need to focus on. So what is a budget? A detailed financial plan of what is mostly likely to happen in the future. It's a focus, an estimate, right? Of but we call it, this one is in the financial context, a detailed financial plan, right? That is of what is most likely to happen in the future. Most of you, you like to listen to the budget of the state, right? State budget. You know what is state budget? State budget. State of the nation address. Then after that, you will hear about the state budget. How much the government is expected to spend, right? And how much the government is expected to receive. Income and expenditure. When you hear the finance minister announcing the budget, the money is not there, right? It's a detailed financial plan in terms of what is likely to happen specifically in terms of how much they are expected to receive and how much they are expected to spend. That is what is in the budget. This year, I think the budget have passed now, yeah. Remember, they were dragging the endorsement of the budget in the parliament because of vet, right? Okay. So next time you must be keen in listening to the state budget, right? You as an individual, you got your own personal budget in terms of what is likely to happen in future regarding your income and expenditure. Do you understand? Businesses are the same, right? They've got their own budget. How they intend to spend money versus how the money that they are expecting to receive. Right. So we say a detailed financial plan of what is most likely to happen in the future, right? Always for a specific time period, right? Could be for a year or whatever, but it must be time bound. Review at regular intervals. You need to review it, right? Normally every month to compare actual performance against the budget drawn up. Yeah, okay. You need to review it, right? This is an expected, look at what we say. What is most likely expected to happen in future? Your detailed financial plan. For example, if you make your financial plan for 1 year, right? 1 year is not something of 1 month, right? Along the line, there are a lot of things that will happen. Things, prices of stuff might change. Do you understand? That is why they said a budget is not something that is cast on stone. It must be flexible. You need to review it, right? Every time, possibly every month. If it is a 1 year budget, right? What you do you compare the actual performance against the budget. What is the actual performance? Your expenses and your income, right? Because remember, when you prepare your budget, it's futuristic. What is going to happen, right? Now, as things have started happening, you need to compare it to what you've planned before to see whether things are working. Ostensibly, that is what we are talking about. Do you understand what I mean? For example, when South Africa made a budget this year, right? Were they aware that there are going to be problems in the Strait of Hormuz? The price of petrol is going to go up. Huh? Were they aware of it? Nobody was aware. Now it's happening. You need to compare now the actual performance against the budget. Did you see? You plan, this is how much I intend to spend. This is what I intend to receive. Now things are happening. You need to look back to see whether you are still on track. That is why sometimes we always have a mid-term budget review in the parliament. Sometimes they ask for supplementary budget when they discover that things are not going well the way it should be. Does it make sense to you? That is public administration. I'm not teaching you public administration, right? Okay, or public finance. We do that one in public finance. Then draw up for key functions of the business. You need to have a sales budget. Sales budget is how much you intend to sell, right? You need to draw up a sales budget, right? In terms of what you think you are going to sell in future. I think we've done this thing before, man. Sales budget, sales forecast. We've done sales forecast, right? Then production budget. If you are producing, manufacturing, you should be able to project, right? From your sales budget, then you can make your production budget. This is everything starts from the sales budget. This is how many I'm expected, right? To say how much I'm going to use, right? To how much I'm going to get from the sales, right? Then you should be able to work out how much you gonna it's going to cost you to produce what you're gonna sell, right? Then the material budget, materials, you need to buy materials to make the product. So there must be a material budget, how much you're gonna spend to acquire the material. Then the labor, remember people need to work to make the product, right? The labor requirement needs to be paid. You need to work out the budget for that, right? An administrative budget for overhead. Does it make sense to you? Right. Guys, do you understand what we are trying to explain here in terms of budgeting? Right? Okay. Budgeting, in short, has to do with income. Listen, listen, listen. Younger, look at me. Budgeting essentially has to do with income and expenditure. Income and expenditure. Right? Expected income and expenditure. Do you understand what I mean? Right. So you prepare it in advance. Right? So let me see. Key question to ask when drawing up the sales budget. Okay, you see, we are going to unpack each of these: sales budget, production budget, material budget, labor budget, as well as the overhead budget. If you will, you can call it the administrative budget. Right. So, ladies and gentlemen, so far so good. I believe you've learned something. By virtue of that, we are going to call it a day now, right? So yeah, that's it. Any question? No question. Right. All right. Have a lovely day.